Hello everyone, and thank you for watching my videos. In this video, we're going to learn how the speculators move and shake the Forex market. And this will be the first video that I've done where I will show you how you can get help from other investors when we make our trades. But before I can do that, we need to take some time to understand what the speculators do in this market. So here's what we need to know about the speculators. They do play a primary role in many financial markets. So not just the Forex market, but also the stock market, commodities market. So if you're into those markets, we do this video is also for you because the speculators are important. What they do is important. And the goal of the speculators, what they're trying to do is they want to get into the trend before it begins, and also to invest large amounts of capital before the trend begins in order to maximize their profits and to get their profits quickly. So the primary goal is quick profits, quick meaningful profits, I should say. Now, how does speculation pertain to the Forex market? Whenever there's a large amount of fluctuation, for example, the non-farm payroll, where the prices involving the U.S. dollar can shoot upward greatly or shoot downward greatly, the central banks will step in to keep the value of those currencies right where it should be, so they don't run away too far and upset the natural balance of things, such as the domestic economy, for example. And also, most speculators in the Forex market, they're just individual investors, just like you and me, who are just seeking a profit. And large amounts of speculation, it can cause an upset in the Forex market as well. So, the speculators, being a speculator actually can be a good thing, and also it could be somewhat negative. But the good thing about the speculators is they keep that market moving, and volatility is key, as I explained in my first video, where it doesn't matter, and this is the beauty of the Forex market, it doesn't matter if the market is moving up or if it's moving down, just as long as it's moving. We need those movements because more movements gives us more trading opportunities. So we do need those speculators in there. However, too much speculation can cause a bit of negativity, as I will explain at a later time. However, if you yourself happen to be a speculator, keep this in mind, that the broker that provided you with your trading platform, they're going to take advantage of that. So you do want to be careful. Now, how can we get these investors to help you? As I explained in the beginning of this video. Speculation adds volatility to the market, which is key. We want that volatility. However, too much volatility can make things a tad scary. So, if you are new to the Forex market, you do want to pay attention. You do want to pay attention when the market has too much volatility. Maybe you want to sit this one out. Maybe you want to take some time to learn if you're not familiar with this volatility. That way, the next time you encounter it, you'll know what decision to make. Also, if movements in the market are caused by speculation, investors will play on those speculations. And because the speculators, they risk more than the investors, and they can make markets safer for the hedgers and other traders. For example, many of us, we get our financial news from many different sources, such as CNBC, Bloomberg, Reuters, or whatever it is that's out there. They all have financial analysts, and they will all give their predictions as far as whether or not the bullish trend is about to begin or the bearish trend is about to begin. Millions of investors are watching that same analyst, and they're going to follow the advice on that analyst. Sometimes the analysts are right, sometimes they're wrong, and of course we've all heard the old saying, don't believe everything you hear on TV. However, we can use speculation to our advantage because many people do believe what they see or hear on TV, and sometimes it does pay to follow the advice of analysts on TV, whether they're right or they're wrong, because what the analysts will say, many investors will follow, and we can use that to our advantage, and we can factor that into our decisions, depending on what type of trader you are. And also, we do want to watch out for sudden reversals. Sometimes the speculators, they're not strong enough to start that trend. Like, for example, let's say the market has been bearish for a long time. However, the bullish speculators want to reverse that and build a bullish market. They may have the momentum for a short period of time, but if the momentum's not strong enough, then more bears will come in and keep that market bearish. So be careful. And we don't want to get into these trends too late if we want to trade on speculation. And also, we do want to wait for the bullish bubble to burst and short when it pops. So I've mentioned before on getting into the trend before it begins, but what the speculators can do is they can even create bubbles. They can create a false bullish trend, a trend that should never have been there in the first place. Maybe we can just follow that bullish trend, wait until that bullish trend is finished, and then we can enter a short order. So we can also play the bursting of the bubble. And also, most speculators, they do rely on news for information, so definitely monitor all financial news. So keep your eyes glued to whatever financial analysts that you follow on TV, because millions of investors will follow what they say. Or if you get your news source from a newspaper or the internet, also keep that in mind as well. Well, I shouldn't say newspaper because that's kind of slow. But, and also in this video, I did cover two basic ways to take advantage of the speculators. We can jump into the trend right as it's beginning to maximize that profit, or we can wait until that trend is finished, until the speculators are done influencing the market, and then once that bubble has popped, then we can enter the market going the other way. But just remember that we need these speculators in there because what they do is they push large amounts of capital to shoot those prices in one direction. That way, we don't have to put so much capital if we just want to make a short, quick profit and we're not looking for anything major. So this is just one of the strategies that you can incorporate into your own trading strategy. So, and also I will keep making videos. I don't know how many videos I made so far. I think this is video number 42, but I've made many videos, and also go back to my other videos. I do make many videos on YouTube, so it would help to watch my videos again and again and again to get the information that you might have missed when you have watched my video the first time. And then in future videos, I'll show you some more strategies that we can incorporate into our trading strategies. But try not to overwhelm yourself. Just focus on one small piece of advice or one type of strategy at a time. Thank you for watching this video, and good trading.